Donald Trump wins in a landslide, and gold and silver get whacked. Did that catch you by surprise? Not me. I actually predicted that on this channel a couple times prior to the election. I'll explain why gold and silver dropped so much last week, what I see coming between now and Inauguration Day, January 20th, and then I'll tell you exactly what I bought on the pullback, all in this video. So watch it to the end, hit the like button, and maybe you'll win a 1 ounce silver buffalo on me. But first, let me say I am so happy that Donald Trump won a second term. If you were a Harris voter, that might anger you some, but hey, whoa. I'm going to say a few things in this video that my MAGA viewers might not like either, so get ready. I plan on ruffling a few feathers. I am convinced that what we saw last week with the price action on precious metals was a purely unrealistic reaction over Donald Trump's victory. Crazy, unwarranted euphoria. Now, you heard me right. Unrealistic, unwarranted. Commodities traders just seem to be thinking we're headed back to the roaring 20s or maybe the Gilded Age. Now, again, I am super happy that Kamala Harris lost for a whole host of social, geopolitical, and economic reasons. But folks, let's all take a deep breath of economic reality. This is a temporary political sugar rush in the markets. Gold and silver prices are not going to remain low. The US dollar is not going to stay this strong. And frankly, nothing fiscally or monetarily is going to change under round 2 of President Donald J. Trump. Now, let me explain before you go bonkers in the comments. Our national debt was $19 trillion when Trump started his first term. Now it's almost $36 trillion. That's an increase of 85%. And Trump is responsible for $8.4 trillion of it. And yeah, I know Biden added more than Trump, but guys, let's be real here. Do you really think Donald Trump cares that much about our national debt? Do you really think that our debt is going down over the next 4 years? No way. Trump also doesn't care a whole lot about the budget deficit, which is 3 times bigger than it was in 2016. The deficit is only going to get bigger during Trump's second term. Yeah, I hear that he's going to, hire Elon Musk to tackle government waste and trim the fat. I've heard numbers like cutting $1 trillion per year thrown around. Hogwash. If he can't touch the big ticket items like Social Security, Medicare, defense, interest on the debt, maybe he can squeak out 100 or 200 billion in savings, but that's almost meaningless when you have a $7 trillion annual budget. A couple $100 billion is a rounding error. So the deficits are going to continue to grow, and that's before they start cutting taxes. Now, I'm all for lower taxes, don't get me wrong, provided we have smaller government. But we don't. Trump, and to an even greater extent, J.D. Vance, loves big government. They ain't cutting. A Republican Congress ain't cutting. They never do. And even if Congress does absolutely nothing, the spending is going up because it's on autopilot. It goes up automatically. Trump will cut our income taxes, but I'm sad to tell you this, he's going to be replacing them with an inflation tax because, guys, the math is super simple. If you don't cut government, but you do cut taxes, you pay with inflation. Oh, but Yankee, what about the tariffs? Okay, we may have tariffs, although I think it's going to be a lot harder than he thinks to get it through Congress. But even if they do, and it somewhat offsets the tax cuts, even though Americans may have more cash, things will become much more expensive. Told you I'd ruffle some feathers, but someone's got to tell you this. Now, with our massive debt burden, interest rates are going to have to stay artificially low so we can service the debt. Shoot, the Fed just cut another quarter point. As rates go down, treasury prices go up. And no one is going to want our IOUs when the price spikes. Just like they did before, they're going to be forced to go back to quantitative easing, QE. Because the only way we can have these tax cuts and pay for the spending is to monetize the budget deficits that they produce. That's print, baby, print. Buy up treasuries, bail out the banks. It's 2008 all over again, but this time a lot worse because we have much higher debt. So, what does that have to do with precious metals, gold and silver? Well, I still think the bond market is going to collapse. Maybe even on Trump's watch. I sure hope not. And that would not be bullish for the dollar. It would be bullish for gold and silver. So the spot price pullback that we're seeing is temporary because the economic exuberance is unwarranted. The real Trump trade is higher gold and higher silver prices during his second term. And frankly, I think the spot price honeymoon for gold and silver may end even before his inauguration. And that brings me to what I'm buying right now. I've been buying physical silver and gold in dribs and drabs over the past few months. I thought a Trump victory was likely and it would do this to metals, so I held back a little bit. But now I'm playing catch up on my purchases. I plan on driving hard, especially with silver, from now until January 1st. I realized I had slowly accumulated just about a half of a second monster box of Silver Eagles from before COVID, including this tube of really ugly cull Silver Eagles. I was rather surprised, frankly, and I thought, what the heck? Maybe I'll buy some more. My focus in 2024 has been on silver rounds. I bought a lot of those. But the premium on Eagles are more reasonable, so I bought another tube on Friday for Misty Bullion. I really doubt I'm going to be able to finish the other half of this off before the prices go back up again, but it's a fun goal. I'm also going to do something else while gold's spot price is temporarily down. I'm going to lower my cost basis on a gold mining stock I first bought back in January 2022. My shares in Gold Mining Inc., all 3,731 of them, are down 36% in value. I told Mrs. Yankee that last week during dinner. She was like, honey, did you sell it? And I said, heck no, I'm not going to sell it yet. In fact, when the market's open, I'm going to buy some more. And she was fine with that. So Gold Mining Inc. is sponsoring this portion of the video. But I research commodity companies on my own and make my own determination on whether to invest in them or not. And while I certainly stack physical gold and silver for protecting my wealth, I have an entire model commodities portfolio, which includes Gold Mining Inc. I put the list of stocks I own down there in the description of this video. Now, I've bought and sold positions within that portfolio for years to take some profits, but the model is up to date as of November 10th, 2024. Check it out if you want. So now I think with this pullback, it's time to buy some more shares. And if you give me a few minutes of your time, I'll bet you'll agree with me. Gold Mining Inc. is on the New York Stock Exchange. That's pretty special. And they're under the ticker symbol GLDG. They're trading for just 86 cents a share right now. That's near its 5-year low. Think about it. Spot gold is trading at just off its all-time highs. Gold stock ETFs, like the GDXJ, were recently trading near 52-week highs. That said, check out this on Gold Mining's historic performance on your screen right now. You can see just how incredibly well Gold Mining performed against both the spot price of gold and junior mining ETFs. Between December 2015 and July 2016, gold spot went up 31%, and the GDXJ went up 160%. But Gold Mining appreciated 525%. And again, between the period of May 2019 and August 2020, spot gold went up 51%, the junior ETF up 112%, and Gold Mining went up 400%. Now, these are, of course, small windows where GLDG appreciated. And while past performance may not indicate future performance, I do think it shows that Gold Mining has previously performed well at times when we were in a rising gold price environment. So was I a bit early with GLDG? Probably, but I'd rather be 3 years early than 3 weeks late. Gold Mining owns 80% of an Alaskan gold exploration and development company called U.S. Gold Mining, $95 million worth, based on its latest closing share price. Gold Mining also owns another $35 million in Gold Royalty Corp, based on its latest closing share price, one of the fastest growing royalty companies in the natural resource sector. I've profiled both of them before, and I think they're awesome too. But Gold Mining Inc. has a $175 million market cap, with mineral resource estimates across its properties of 12.5 million ounces of gold indicated and 9.7 million ounces of gold inferred. They also have a 75% ownership of a uranium project that gets almost no attention. So with about 120 million in public stock holdings, you do the math on what value the market is currently attributing to all its projects. As a current shareholder of Gold Mining, I am personally getting in on a portfolio of 12 gold and uranium projects. 12 total projects. That is their amazing value prop, guys. Check them out under the ticker symbol GLDG and definitely do your own research on them, like I did, before buying any shares yourself. All right, for those of you who stuck around to the very end, if you want a shot at a 1 ounce silver buffalo round, here's your chance. This is for US and Canada mailing addresses only. First, make sure you've hit the like button on this video if you haven't already. And second, in a single comment below, write a sentence that includes the number of projects that Gold Mining Inc. has in its portfolio. Do you remember that number? Make it a stealthy comment, right? So people don't just see a number in the comment section. They'll be like, oh, maybe I should put that number in there. No, that's going to make the odds a lot harder to win. Anyways, that's what you can get. Put it in. I'll be drawing a name at some point in the future. But thanks for watching. And as always, I hope your day is A-OK.